Good evening, everyone, and welcome to the Daily Volatility Box Report for October 15th, 2019. We are TOSindicators.com, home of the Volatility Box. Today's trading will lead to what is, I think, a new rule that's just going to make our trading plan altogether. It's what led us to have losses today, which I think finally just signifies that this needs to be turned into a rule, which is how we play anything that is considered breaking news events. And so in today's case, that was a Brexit deal. We've seen China news is often considered this sort of a catalyst. So we'll identify a way that we can consistently measure what is considered important news every single time. And anytime that that condition happens to be true, that will automatically be a signal to switch on over to the conservative volatility box to play any sort of fades. And I think that should keep us out of trouble on days like today. Anyway, so for today's trading, we play this a little bit more aggressively than we probably should have, in which I use the aggressive volatility box to try and fade the Brexit deal news. When that came out, I saw it happen. It, I think, came out towards the beginning of the hour. And so I saw price just climb. And once we hit the aggressive volatility box entry lines, to me, I thought, nah, it can't go out much higher. But it did. And so we were stopped out in the S&P. We were stopped out in the NASDAQ futures. We were stopped out in the Russell futures. We were stopped out in the bond futures. And it was really only the Dow that survived, which is interesting because the Dow was the one that came closest to stopping us out initially. And even on the Dow, we didn't make our actual T1 target. This is what we ended up getting out at right into the close. And same with the NASDAQ. The NASDAQ didn't hit our stop or our target. We ended up getting out at the close for a 10-point loss a piece on each of our contracts. And then on the Dow, we got out for a slight gain. All right, so for today, we ended the day with 5 trades in total. Total winning percentage of only 20%, which is not good. And this is why I'm playing these sorts of news events. We've said it multiple times on the videos, and it's just going to become a rule. It's just better to do it with the conservative volatility box. When in doubt, use the conservative volatility box. But for us today, we had a losing day, total of minus 1,900 and some odd dollars, 1925. Also, one thing before we continue is yesterday we talked about some earnings plays. And the one that ended up actually giving us the condition that we were looking for was UNH. And here we had predicted, and this is on our website, and we had also captured this in the blog post associated with yesterday's video, that we expected UNH to gap up and then continue to go bullishly if that happened. And so what actually ended up happening today was we did in fact gap up. And then we continued to go. We had a target, I believe, of $4.38 or so, and we continued to go another $6 plus. And so we'll also look at UNH's chart to talk about how we use the Smarter Earnings tool to really trade UNH's earnings and create very specific conditions for us. And then we'll go ahead and repeat that same exercise for the upcoming earnings for tomorrow or today after the market. And so we'll look at United Airlines. We already covered that yesterday, but we'll cover it in the blog post. And then we also have IBM, Netflix, and a few others that we'll be looking at. All right, so the new rule that we're going to add, and this is updated in the trade plan for all of our Volatility Box subscribers, is anytime on Forex Factory. So if we have a news event and Forex Factory deems it to be, quote unquote, a breaking news event that they've considered important, it'll be denoted with this red folder icon right here. And so just using this in degrees, so red is serious, orange is medium, and then yellow is just sort of a news event just in general. And so anytime that we see a breaking news sort of event, so something like this Brexit deal, the red icons, that's when we'll be switching on over to the conservative volatility box. And we'll outsource the idea of what to consider breaking news to Forex Factory and however they determine what's a red folder. But to us, that's our binary measure then of just looking yes or no. Is it breaking, not breaking? Do I switch? Do I not switch boxes? And this should hopefully then keep us on the right side of more trades than not. Okay, and so for tomorrow, we have our retail sales numbers that are coming out. And then we also have an FOMC member speaking. And then we have some lighter events and business inventories. And then I believe that's it. Oh, some more FOMC members speaking. And so really for these FOMC members, if it's not Powell, I think I'll be using the aggressive volatility box. But this is where I will actually change on over to the conservative volatility box on the indices along with the bonds. And so that's for the core retail sales numbers, especially any number that signifies that the economy starting to slow down where we might have a reaction, that's where I'd be looking at most definitely switching on over to the conservative volatility box. And you might even have a bias if you have signs of this economy slowing down of maybe only looking in the bearish direction. And so you might be looking at fades on the short side only if that's what the numbers signify. Again, this is something you can use price action and just what the actual event and the report numbers end up being to make the decision of, but conservative volatility box at the least for these sorts of numbers. And then I think based on the volatility we then face from that, you can make the decision. But these FOMC events or these speakers shouldn't really deem a need to change on over to the conservative box on their own. It's really the retail sales numbers that I think will sort of dictate what volatility has, along with that first hour test that we always use. All right, and below are the list of earnings that are coming up for tomorrow. And these numbers here, you can go ahead and pause if you'd like, but it's based off of just a 1-year time frame. And so the max that you can see on any given side is, I believe, 4. And so when you see 2, that signifies 2 out of 4, so on and so forth. So you can pause the screen if you'd like, but we'll cover the ones that we found interesting, at least the earnings plays that we're looking at for tomorrow in the video. Some of them here and then some in the blog post. Okay, so let's first start with the S&P chart, and we'll begin by drawing our entry line and starting this morning the way we'd start every single morning, where we check to see whether or not the volatility box breached either side's aggressive volatility box entry lines in that first hour. We see that we very clearly hadn't on either side, and that was our sign to then continue to use the aggressive volatility box. And so as price then continued to happen, we had the Brexit news come out right here, and this is where price had shot up. And so when it approached the entry line, to me, I thought, okay, at this point we must exhaust, or at least that's what I thought. And we had these long wicks here, which may have added to the fact that you may have thought that price is starting to reverse. But instead, we shot up some more. And so here we can kind of see that playing Brexit aggressively was just not a good idea, at least using the aggressive volatility box. And this is true across the board for all the indices. And we actually ended up breaking, I think for all intents and purposes, we touched the edge of the volatility box, and then we bounced. And it's right here where we actually got taken out, our stop. And so that wasn't fun to see, especially because price then started to reverse. We would have, I think, come back to what would have been our break even for the S&P once the afternoon open happened. But for us, we aren't looking to have that afternoon risk. And so we got our right here where you had a chance to get out of break even or a little bit less if the stop hadn't taken you out. But for us, the stop is the one that took us out. And so both of our contracts were losers. Switching on over to the Dow, we can see the same thing, but the Dow on its way down had better follow through. So after we came close, our stop had still survived. We then had an opportunity to get out of break even if you had taken that plug. And for us, we got out towards the close where we had an opportunity for a slight gain from our entry at the volatility box entry line. But again, nothing to write home about, nothing that covered our losses in the S&P, the NASDAQ, and the Russell, and the bonds. But still, it was nice to see at least one of them not be a loser. All right, next we'll look at the NASDAQ. And the NASDAQ is the one that initially held and gave us our most conservative entry where price was staying outside of the clouds. And so I thought that the NASDAQ was containing its volatility a little bit better before we then made this move upwards, which then took out our stop. And that's where this trade ended for us on the NASDAQ, where both of those contracts were losers. And finally, looking at the Russell is again similar to the NASDAQ in that we had our entry, price was being contained, and then all of a sudden we had this rip higher, which then took our stop out before we had this puke down in the direction we were looking at. And so you could argue that our stops were a little too tight here. You could also argue that just the Brexit deal was not being contained inside of the aggressive volatility box because on all of these, and before we actually continue and go on to the next topic, we'll just quickly look at the bonds. Same thing happened here. You had your entry, and for us, our stop actually was taken out in this wick right at the edge before price then started to reverse. You had an opportunity to get out of break even before you would have been stopped out anyways. Right, and now across the board, if we switched on over to the conservative volatility box after we got the news, where you had plenty of time, you still had, I think, 10 minutes before price had breached even your aggressive volatility box. And so you did have times to switch on over to the conservative volatility box and adjust your orders. But switching on over to the conservative volatility box on the bonds, that gave us a much nicer entry, which actually gave us our follow through, and this would have been a winner. And then across the board on the S&P, we didn't really trigger an entry. Same thing with the NASDAQ, same thing with the Dow, and same thing with the Russell. And so I think that's why that's going to now be a rule. Anytime we see a breaking news event that Forex Factory considers to be important in breaking news, switch on over to the Conservative Volatility Box. All right, and then another thing that I'd like to look at in today's video is UNH. So yesterday's game plan we had was if we gapped up, which is what happened. So we opened above yesterday's high, which we had plotted right here. So if we gapped above it, then we were looking to continue in that direction for about $4.38. We ended up gapping up and continuing for about, actually, let's measure this. So from our open, we ended up going a total of $6 and let's say 98 cents, so almost $7. And so that is how I think using the Smarter Earnings tool helps you set up a trade for very similar conditions, right? Where we had a very specific plan. We were only looking at UNH if it gapped up. And if it gapped up, we had only one direction that you were looking to trade it in. And it's up to you to determine how you enter these positions. For us, it's based right off of the open price. But if you're trading options, you might want to wait a few minutes to let the option prices actually settle down. You may have been, if you're, say, a breakout trader, looking at this as a breakout and then trading a breakout in the direction for a move from the open of $4 and some odd change, trailing your stops up. Lots of ways that you can play it based off of your trading style. Now let's look at some noteworthy earnings for today. Okay, so we'll start with ASML Holdings. It's an ADR sponsored company, so keep that in mind. And the way we've just filtered this is anything that using the Smarter Earnings tool has given us 4 or more trades on either side strategy. And so the strategy is defined by either gap fills or total gap and goes. And we're looking for this number to be either 4 or more on either side, which then tells us that, okay, ASML tends to do a certain thing at least 50% of the time or more, and then that gives us a condition that we can then start to investigate a little bit further. And so we've already filtered down the list from the larger set of earnings. And so ASML is the first one that passed our list, where we see that ASML has a tendency to gap and go. And we also, if we take a look at the actual chart of ASML, see that we've been really bullish for quite some time now, where you might look at this 2 different ways. You might, one, look at this in the sense of we're already really extended, and trying to play this in a bullish, because that's what this gap and go tells us, bullish gap and go scenario might be a little bit aggressive. Or if you are, say, on the side of supporting trends, and if they happen to beat, and you might actually believe in ASML as a company, then a gap and go might just continue to drive your momentum in the bullish scenario. But this is the first stock that passes our condition. And so really ASML, the only thing you might be looking at is a gap and go. The thing that's working against ASML is the fact that on the other side for our gap fills, we have our gap up fills as well. And so really this doesn't bode well, because it tells you that if you were to gap up, 4 out of 8 times you have then continued to go in that direction for at least $3.80, or on average rather $3.80. And 3 of those times have been on beats. But 2 out of the remaining 8 times have been also gap ups, where you have then filled the gap. And so that's another way to look at it, where you have a trade where if you gap up, that's not really giving you an edge either way, because you have a tendency to both fill gaps along with actually gap and go. And yes, you might argue that gap and go is more frequent, but really you're looking for the places that you might be able to narrow down tickers as much as possible, especially in the case of today where you have quite a few earnings. And so ASML is one that might be medium on our list in terms of earnings that we're looking at, but really you're looking for a gap and go, and hopefully that's on a beat, since 3 out of 4 times have been on beats. And if you're looking at that, on average, a $3.80 move. And we'll also be covering this, and we'll have a table on our website which covers each of these a little bit more. I'm going to breeze through this just in the sake, or for the intents and purposes of this video, but we'll also have things like the V-score prices that are nearby that you can use to plan out the trade in case you're looking at any of these that we talk about. All right, the next trade we'll look at is CSX. And for CSX, we see something also semi-interesting. This is why I pass our scanner, is we have 4 gap fills and 4 gap and goes. And so really we see that a scenario happens, both of these strategies has happened 50% of the time. And so for our gap fills, we're looking at a bias of a gap down being filled. And only once has that happened on a beat, so we're not necessarily caring about the beat. But so the gap, the preference is a gap down. And then on the gap and go side, we see that we have a bullish gap and go, and on average that's $1.85. And so really the plan on CSX might be, if you gap down, then you're looking for that gap to be filled. And if you gap up, then you're looking to continue in the direction if and only if we ended up beating on the earnings, and we're looking to move an average of $1.85. That would be our game plan for CSX. Also, some interesting notes to keep in mind is that we're hovering near the 0 standard deviation line, and then the 1 standard deviation would be sort of that stretch target that you might be looking at, or you might even run a custom standard deviation off of this previous high. All right, the next earnings that we'll take a look at is IBM. And the very interesting about IBM is out of our 8 earnings in total, we've had 7 gap and goes. And of those 7, 3 of them have been bullish and 4 of them have been bearish. And so really what we see is 7 out of 8 times, whichever direction that we've gapped, we have then continued to go in that direction. And so that's really how I'm looking to play this. The fact of earnings and misses don't really tell us too much on the case of IBM, especially in the case of a bullish scenario. In the bearish scenario, you might see that, okay, 3 of them have been misses. And so if, say, you gapped down, but really on an earnings beat, that might be the one scenario in which you're not really looking to play the direction of the gap. But apart from that, I think IBM is a good candidate just in overall for the gap and go strategy. All right, and then the next one we'll look at is Netflix. And so for Netflix, we see out of the 8 earnings in total, only 1 has been a gap fill, but 5 have been gap and goes. And of those 5, 3 have been bullish and 2 have been bearish. And so really the way we read this is 5 out of the last 8 earnings have we've continued to go in the direction that we've gapped. And earnings beats or misses haven't really given us too much information. And so really I'm just looking at trying to see if we gap up and if the story sort of supports the direction of the gap. So let's say or Netflix might have, say, given good guidance, or it might have beaten, or maybe the more bearish scenario, which is Netflix misses, which then supports the overall trend. Even though our market pulse tells us that we're in accumulation, we see that we've really just been in a stage of deceleration to now distribution, and so that might be how. And so that might influence you to trade Netflix on a bearish scenario. But really, the gap and go is a strategy that gives us the edge on Netflix. We see that happening 5 out of 8 times. And then on average, in the bullish case, we move $4.43. And on average, in the bearish scenario, we move $3.20. And we see we're hovering right around that -1 standard deviation line. And so you might be looking at a break either towards the 0 standard deviation line or the -2 standard deviation line, and then playing it towards either of those, acting as magnets. Okay, so we have a few more earnings that we've covered on our website if you'd like to take a look. And then we just do a little bit deeper of a dive. So we might look at some percentages there. We'll have the V-score targets plotted out. And this is all listed in a table format so that you can come back to it, easily reference these charts tomorrow. UAL will also be included on there since it reported after earnings today. And that is really our game plan for earnings. And then in terms of the volatility box trades today, not such a good day, but I think that led us to creating a rule, which I think will help us more times than not. Yes, we may miss some trades as a result of that news, but I think on the aggregate, we come out on top and our P&L looks a lot better. And so today was a lesson, not really an expensive lesson. Yes, expensive in terms of our overall losses, but again, we've seen our gains be much, much more even on our boring days. And so this is a loss I can live with. Again, managing our emotions, following our game plan. We've learned something from this lesson, added it to our trade plan, and now we're looking to trade tomorrow with the same degree of confidence and follow our same trade plan and watch out for those retail sales numbers and really just follow the game plan that we've laid out tonight. All right, take care, everyone, and happy trading.